everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Welcome back to Moneyline with Nancy. If you're just joining us, we're diving into a critical topic, like I mentioned earlier, the anatomy of Nigeria's declining inflation. According to fresh data from the National Bureau of Statistics, Nigeria's headline inflation fell to 22.97% in May this year, down from 23.71% in April. But what exactly is driving these numbers down? And are price pressures truly easing, or are we simply benefiting from base effect? Is this a macroeconomic turning point, or what I call a temporary illusion? To help us make sense of it all, I'm now being joined by Mr. Tajudeen Ibrahim, the Director of Research and Strategy at Chapel Hill Denham. Good morning, Mr. Ibrahim, and welcome to the program.
Good morning, and thank you for having me on the show today.
Thank you for joining us. Let's get started, and I think I'll start with the title itself. The title itself, talking about the anatomy of Nigeria's declining inflation. When you think about anatomy, of course, it talks about the structure, the internal working systems. And when I think about inflation in the context of what we want to discuss right now, I think of it like an economic body. So my question to you is that how should we be examining Nigeria's declining inflation to understand what's really driving the movement, and in this case, the decline?
I think the best way to understand the inflation is to look at it from a month-on-month standpoint. So we consider what happened in the month of May, because the inflation numbers we are reviewing is for the month of May. So what happened in the month of May to the prices of foods and services, relative to the month of April. So then from that month-on-month standpoint, then we now take it up to, year-on-year, when we look at, where prices currently are relative to where they were last year, and, by how much have prices on average moved up, or by how much have they come down, if at all, they have come down. So I believe that is the way to look at it, month-on-month first, and then year-on-year later.
So May's, let's drill into the numbers. May's 2025 headline inflation is 22.97%, down from 23.71% in April. Statistically significant? Is it statistically significant or perhaps economically meaningful?
So both of them actually, because if you look at 22.97%, what it means is that on average, the cost of, goods and services to Nigerians increased by 22.97% in the month of May, relative to where, those prices or the costs were in May 2024. And one major implication of that is Nigerians really had to pay as high as 22.97% more for, on average, everything that, they wanted to buy in the month of May, compared to where, those prices were in May 2024. And it also speaks to consumers' pockets, because, for instance, if you earn minimum wage, which is around 70,000 naira, it means that whatever you were buying previously at, let us say, 100 naira in 2024, in the month of May, 2025, you now have to pay 122 naira 97 kobo. That is what it implies, and it now depends on how many units of that good do you want to buy. And it is also an indication of how much or how many of such units would you be able to afford with your minimum wage of 70,000 naira. So I just put this there to put things in perspective in terms of the impact it has on the pockets of Nigerians when we say inflation is 22.97% in the month of May 2025. But the interesting thing, however, is that the inflation rate came down in the month of May 2025 relative to the level that it was in the month of April 2025. It means you are now seeing a slower increase in the prices of goods and services, which somewhat is positive, but can we have it much slower than we currently have it? The answer is yes, and that is where we can begin to paint a positive outlook around what we can see in the coming quarters.
I will want you to speak to me from a research perspective as to this topic that we are discussing to assess whether the disinflationary trend that we are seeing is broad-based or is just confined to some index components. From the evidence that we have from the NBS, of course, we've seen that the components have been enlarged. Food is not as so much weighty as it used to be before. So from a research perspective, what's your own analysis from that?
Okay, from a research analyst or a macro analyst standpoint, let me say it out there that the inflation number of 22.97% is in line with our expectation of 22.9% because that is what we put out there in the month of May, in early May, to say this is our outlook for the month. So the number came in line with expectation. And interestingly, we had a situation where, food inflation moderated. And, what even came in as a positive surprise is that we had core inflation coming, significantly down. When you look at it on a month-on-month basis, printing at 0.95%. So what that implies basically is that we have energy prices being supportive of the moderation that we saw in core inflation. Let us remember that we have a situation now where, due to government policies, refineries in Nigeria are now able to buy crude oil in naira, so from the NNPC. And interestingly also, due to the fact that we now have like the largest refinery in the country and also in Africa, which is Dangote Refinery, Nigeria does not really now depend 100% on imported PMS. So what that means is that we are now somewhat in a better position in that regard because we have somewhat reduced the impact of currency volatility on PMS prices. And secondly, we have also reduced the impact that currency volatility also has when we look at crude oil prices globally. So those two elements are playing out positively to underpin the disinflation that we saw in the month of May, particularly for core inflation, which I think is what we should watch out for going forward. But there are downside risks, nevertheless. One of such downside risks is what is happening, the tension in the Middle East. When we talk about the war between Israel and Iran, that war can lead to a significantly higher crude oil prices and then possibly lead to imported inflation, and that, is a major downside risk to the disinflationary trend that we currently are seeing in Nigeria.
So let me anchor on that. Let me take you up on that disinflationary trend which you just mentioned. How should the average Nigerian interpret this disinflationary trend? Because prices may be rising slowly, but prices are still rising.
So in
So,
any
so
economy,
is there a light at the end of the tunnel, especially
so,
for real household purchasing power? Because prices are still rising, but they are rising slowly.
So no doubt, no doubt, in every economy, you would always see, some level of price increases. And because even not having price increases in any economy is not a good thing. What is bad is for those increases to be too much, for too long, over a particular period. So what we currently are seeing is good in the sense that, fine, we are seeing price increases, but the rate of those increases is decelerating. So that deceleration is what I believe we should all monitor to see how much more can we see. Can we see inflation of 15% or even lower than that? So if that, for instance, materializes, then consumers' pockets, will be less stretched in terms of, having to pay for goods and services. But if we still have it well above 20%, it will look as if nothing has changed or nothing is changing, because it implies that consumers are still having to pay up to more than 20% in increases to consume goods and services. So my sense is that, we need inflation rate that is well below 15%, and even possibly that is even single digit, in number. We have had it before in this country, but many years
There you
ago.
go.
If we
Yeah.
can have that kind of situation again, I reckon that, many more Nigerians will feel the positive impact, because at some point it will then imply that the money you are making as an individual, the increases you are seeing in the purchases you are making, those increases are not rising too fast. And then you should be a lot more comfortable than a situation when we had inflation number being above 30%. I think that is what Nigerians should be hoping for. And on the part of the government, there should be policies directed towards achieving some of these numbers that I am mentioning.
How do we separate real economic progress from optical disinflation? I'll call it optical disinflation, because even the government is going round about town now talking about, oh, the economy is doing well, we are recovering. They're saying, okay, we're having real economic progress. But how do we separate this? Because part of real economic progress is that prices are easing, but yet we continue to have this price puzzle. How do we separate that real economic progress from the optical disinflation?
So the way to look at it, in my view, is that, let me give, two examples in this case, because we like to show real life examples. Let's talk about, PMS prices. Sometime last year, due to the full deregulation, removal of subsidy, we had, PMS, rising to above, 1,000 naira. So we were buying at filling stations at more than 1,000 naira per liter. But, there were policies around, you know, selling crude oil to local refineries, in naira, instead of, selling to them in dollars. So that, to a large extent, emboldened the local refineries to be able to sell their PMS at, slightly lower prices. So as we speak, and I'm going to be particular about Dangote, or let me say, filling stations that deal with Dangote refinery in this case. So those filling stations, as we speak, are selling in Lagos that I live. I mean, where I live, they are selling at around 875, 865 naira per liter. That, about 200 naira or thereabouts decline in that price is something that average consumers, can feel. That is number one, concrete, factor to consider. The second thing is exchange rates. We were in this country last year and we had exchange rates, being as high as like 1,800 level, 1,750, level or thereabouts when we wanted to buy at borrow the change of operators. But as we speak, exchange rate is around 1,500, 1,600, naira level. You see that 100 to 200 naira, moderation that, we have seen on exchange rate is something. So if you need foreign currency as we speak, you can buy at a lower price compared to what you are buying, last year. So that is another, concrete evidence. And it did not come just due to mere market forces. It happened because there were deliberate efforts by the authorities to ensure that, the naira appreciates in the FX market. So I think at least for those two, they appear to be like concrete, evidences around, things getting slightly better,
So,
but
so,
at a
so
very
would you
slow
say,
pace.
yes, so would you say, because my question actually was separating economic progress from optical disinflation or perhaps statistical mirage? Because, for example, I'm looking at inflation components here. The stickiness is still there, and many Nigerians are still asking the question if there is even a credibility gap between official inflation data and the daily life experiences here in Nigeria. From what you said, and I agree with you that these are some efforts that the government made in terms of unification of the naira, but the naira is still at around 1,500 naira and all of that. The CBN has said, oh, it needed to do this and all of that. Naira for crude policy that has also tried to bring in some kind of innovation, in terms of what they were doing there. With all of this, do you think that the headline numbers are giving the policymakers a false sense of progress? Meanwhile, Nigerians are still not experiencing relief in terms of falling inflation numbers. And that also brings me to the question of credibility gap between the official inflation data and the daily life experiences that we all live. You go to the market
Yeah,
now, you'll be looking for what you bought with the amount, that you go to the market with. You,
absolutely,
you understand what I'm
absolutely.
saying?
I understand what you are
Yes.
saying, but I think we should, not, view it from, a short-term, standpoint. And I say short-term standpoint because currency into the country. And when they bring foreign currency into the country, it means that it allows or supports the stability of our currency. And that is partly what I was referring to when I said that the exchange rate has come down from where it used to be previously. So that we can say is the effort being made by the CBN. But when we look at interest rates and we're not looking in that direction, interest rate being higher is actually not good for the economy because it somewhat, forms a headwind to the growth momentum of businesses because when interest rates are, way too high, no business really wants to borrow. And even when interest rates are way too high, it can cause, inflation because if I have to do my business by borrowing at a significantly high rate, I'm going to be increasing my prices so that I'm able to, number one, stay profitable. I'm able to, number two, make as much money as I can to ensure that I'm able to service, bank loans. So, I think the CBN is doing, some good things, but not all of them currently are good for the broader economy.
What does this trend mean for interest sensitive sectors like manufacturing, even the real estate sector? This
So
the slower inflation trend.
So what it means is that it is a big positive for the manufacturing sector because what it implies is that for them to buy raw materials, for instance, it means that fine, raw materials prices are rising, but they are rising at a much slower rate. And I'll give you an example. If I have to buy raw material, previously at 123 naira, 70 kobo, per unit. And, now I have to buy it at 129 naira, 70 kobo per unit. It means I'm buying it at, a much, lower price compared to, what it was before. No doubt, the two prices are still higher compared to like 100 naira per unit that I was buying it last year. And it implies that I can be a lot more profitable. And it also
Okay,
implies that I don't have to increase my prices going forward
but
to be
hold on.
more profitable over
Yes,
time.
but hold on there, Tajudeen, and perhaps you shouldn't drive our hopes up yet, because I was very careful. I knew what I asked in terms of the trend. What does it mean for interest-sensitive sectors like manufacturing and the real estate? Bear in mind that, of course, if they go to the market to buy their inputs or whatever, it comes at a slower price, at least a slower downward prices, but the prices are still up. How would you now factor in the interest rates that they get from the banks? Do you understand what I'm
Okay,
saying? So you are
I
taking
get
from
you.
one hand, you are taking from the other, because MPR, I think the MPR was at, is it 27% if I'm not mistaken? That's the
It's
anchor rate.
1.5.
Yes. But you go to the banks now, some banks, or if not all the banks, are giving rates at 35%, even 40. So it has cancelled it out.
So the tight monetary policy of the CBN, it is growth restrictive. And it is not just the CBN, it is any central bank across the world. When you are tightening monetary policy, you are restricting economic growth. But it is just going to be for like, a period of time, and then when the indicators begin to look good, then you can, embark on an accommodative monetary policy, to support economic growth. But one thing to bear in mind is that we cannot begin to go dovish. The CBN cannot begin to go dovish, yet because of this current disinflationary pressure, this current disinflationary trend that we are seeing, because it is going to cost us our exchange rates.
Okay.
If we begin to cut interest rates while interest rate in the US is high, and also while oil prices are
Okay.
currently elevated, it can cost us a lot.
Okay, Tajudeen, in just a few seconds, if we are to anchor inflation sustainably at 10 to 15%, just like the president mentioned in his earlier remarks, I think earlier on in the year, he sees inflation at 15% this year. What structural levers do you think that we need to urgently address in just 30 seconds?
So number one, we need to improve on our investment on infrastructure. Number two, and possibly that is even number one, we improve on our infrastructure, on our security architecture. Very, very important to ensure that food prices can be, stable on the back of, stable supply or higher supply. Number three, to my mind, is that we need to ensure that we fix all of the issues around road.
Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.